Ever notice how something happening, I don't know, way over there can suddenly cause massive waves somewhere totally different?
Oh, absolutely. It's that whole interconnectedness thing.
Exactly. And that's what we're digging into today, especially for listeners who, want to get the big picture fast.
Right. We're looking at a piece from The Motley Fool focusing on Delta Airlines, their recent earnings call.
And specifically, what that call, the numbers and the commentary, might be signaling for Boeing investors. And, well, the whole aerospace sector, really.
Yeah, there's a lot packed in there.
So our mission today, let's cut through the finance speak. We want to understand how Delta's report gives us clues about Boeing's path forward, especially with all this talk about trade and tariffs still swirling around.
Sounds good.
Okay, so Delta's earnings. What were the main takeaways?
Well, the headline was really that revenue growth, while positive, didn't quite hit their own targets.
Oh, how far off were they?
They reported a 3.3% year-over-year increase, which, okay, sounds decent in isolation, but their original guidance was aiming higher, more in the 7 to 9% range.
Oof, that's quite a gap. A 4 to 6% miss is pretty significant.
It is, and it tells you something about the current climate.
So what did they blame? What were the headwinds?
The big factor seemed to be this, well, uncertainty around global economic growth. They specifically mentioned these ongoing tariff skirmishes, as they put it.
Okay, so trade jitters.
Yeah, and that seemed to hit their Q1 bookings directly. It suggests people, businesses, maybe they're just being a bit more cautious with travel spending right now.
So this isn't just looking backward, it's casting a shadow on their outlook, too.
Exactly. And this is a key point. Because of these market conditions, Delta actually declined to update their financial guidance for the full year.
Wow, okay, so they basically said, we don't have enough visibility.
Pretty much. When a major airline like Delta says they can't confidently forecast the rest of the year, that definitely makes you pause.
Yeah, that signals some real economic fog out there. And it sounds like they're adjusting course because of it, not just reporting results.
That's right. To protect their margins in this kind of environment, they announced they're going to reduce their expected capacity growth for the second half of the year.
Less flying, basically.
Yeah.
Fewer seats in the sky than they originally planned.
Less aggressive expansion. It suggests they're worried about filling those extra planes profitably.
Okay, so we've got slower growth than hoped, a hazy future outlook, pulling back on expansion plans. Not exactly a picture of booming confidence.
No, not really.
But this is where it gets really interesting for Boeing, right? Because Delta's CEO had some pretty strong words about tariffs, but aimed at Airbus.
I did. Two quotes really stood out. First, we will not be paying tariffs on any aircraft deliveries we take. Pretty blunt.
Okay, and the second?
He added, if you start to put a 20% incremental cost on top of an aircraft, it gets very difficult to make that math work.
Right, 20% on a plane is a lot of money.
A huge amount.
Now, just to be clear for everyone listening, who is Delta actually getting planes from right now? Because that context is crucial.
Good point. The Motley Fool article makes it clear. CEO Ed Bastian was talking about Airbus. Delta isn't scheduled for any Boeing deliveries this year.
Okay, so the immediate fight, or potential fight, is between Delta and Airbus over potential U.S. tariffs on European goods.
Correct.
So Delta is basically telling Airbus, if the U.S. slaps tariffs on your planes, that's your problem, not ours. What does that do?
Well, it puts Airbus in a really tight spot, doesn't it? They either have to, eat some, or all of that tariff costs themselves.
Which hurts their bottom line.
Exactly. Or they risk Delta saying, okay, maybe we don't need that plane right now. Or even canceling orders down the line. Like Bastian said, that extra 20% makes the math tough.
Absolutely. Especially for airlines, known for tight margins anyway. It just throws a wrench into everything. Okay, now let's make the jump. This is the core connection for Boeing investors, right?
Right.
How does this Delta versus Airbus tariff standoff send a warning signal for Boeing?
Well, think about the logic. If a big U.S. airline, Delta, is pushing back hard against U.S.-imposed tariffs affecting a European supplier,
Okay.
isn't it pretty reasonable to think that airlines outside the U.S. might do the exact same thing if their governments, or say the EU, impose tariffs on U.S. goods?
And a major U.S. good in that scenario is...
A Boeing airplane, exactly. So Delta's stance, it could be kind of a preview, a sign of how airlines globally might react if these trade wars escalate or shift.
That's a really important parallel. It's not just about Delta and Airbus. It's potentially a template for how the whole industry might handle tariff costs.
Right.
But the impact isn't just about the final sale price, is it? Tariffs can hit the manufacturers, Boeing and Airbus, much earlier in the process.
Oh, absolutely. There are really two main ways this squeezes them. First, their supply chains are global, incredibly complex.
Right, trucks from everywhere.
So if tariffs get slapped on components, raw materials, whatever, coming from countries caught up in these trade spats, boom, their production costs go up immediately.
Okay, direct cost increase. What's the second way?
Well, think about their suppliers. The companies making the seats, the engines, the electronics, they might face higher costs because of tariffs too.
And they're not just going to absorb that, are they?
Probably not. They'll try to pass those increased costs along to Boeing or Airbus. So it's like getting hit from both sides, tariffs on what you buy, and higher prices from your suppliers who are also facing tariffs.
A cost cascade, like you said earlier.
Yeah.
And let's loop back to Delta cutting its growth plans. How does that specifically cloud the picture for Boeing's order book?
It's pretty direct, really. Airlines order new planes when they expect more passengers, more routes, growth.
Makes sense.
So if Delta and maybe other airlines follow suit, become more cautious about growing because the economy looks shaky, well, their appetite for buying brand new jets, especially if those jets might cost more due to tariffs, is likely going to shrink.
Why buy expensive new planes if you're not sure you can fill them?
Exactly. It weakens the underlying demand.
And the article also touched on the airline industry being cyclical, didn't it? That adds another layer of risk here.
It does. Airlines are famously cyclical. If we see weaker demand for travel overall, that usually leads to lower ticket prices as airlines compete.
Which hits their profits.
Right. And weaker airline earnings generally mean they pull back on big capital spending. And buying new planes, that's a huge capital expense. Easy target for delays or cuts if times get tough.
Okay, so multiple factors potentially dampening demand. Now, what about the competitive landscape between Boeing and Airbus? Could these tariffs actually put Boeing at a disadvantage?
That's a really interesting and kind of a crucial angle to consider. Yes, potentially.
How so?
Well, imagine a scenario where Boeing's costs go up quite a bit because, say, China or the EU imposes tariffs on U.S. goods or on components Boeing imports.
Okay.
But maybe Airbus faces a different set of pressures. Perhaps tariffs affecting them aren't as severe, or they source more from places not targeted by certain tariffs.
Like the article mentioned, the EU doesn't currently have tariffs on UK or Chinese goods, for example.
Exactly. So if Boeing's cost base inflates more than Airbus's due to these trade dynamics, it could make it harder for Boeing to compete on price, especially in fiercely contested international deals.
That could really shift the balance in some markets.
It could. Price is always a factor.
All right, so pulling all this together, we've got Delta's cautious tone, their hard line on tariffs with Airbus, the potential for rising costs for Boeing itself, and softening demand for planes. What's the bottom line here for Boeing stock? It sounds like you could argue it either way.
You absolutely could, and the article reflects that complexity. There are sort of two main ways to look at it.
Okay, give me the glass half-empty view first.
The half-empty take is that Delta's comments are a clear warning flare. Not just for Airbus, but indirectly for Boeing, too. If these trade tensions keep bubbling or get worse,
Then what?
then you could see rising costs hit Boeing's margins, while weakening demand hurts their sales. In that scenario, if you're worried about trade wars really impacting the global economy, Boeing might look like a stock to, well, maybe avoid for now. Too much uncertainty.
Okay, that's the cautious view. What's the flip side? The glass half full.
The more optimistic view basically sees these current tariff skirmishes as maybe temporary. Like maybe they're just noisy negotiations on the way to actual trade deals.
So short-term pain for long-term gain.
Potentially. The argument is that if these disputes eventually lead to new agreements that are actually better for U.S. exporters like Boeing,
Then this period of uncertainty could actually be a buying opportunity.
that's the idea. If you believe things will get resolved favorably, then maybe the current worries are overblown and the stock is potentially undervalued.
And we should probably remember, as the article points out, the market isn't totally naive here. Some level of slower earnings growth has likely already been priced into stocks like Boeing this year,
Yeah,
right?
that's a very important piece of context. Yes. Valuations already reflect some expectation of headwinds. It's about whether things get significantly worse than currently expected or perhaps better.
Okay, so let's really boil this down for everyone listening. What are the absolute key takeaways from this whole Delta earnings Boeing implications? Deep dive.
I think the main message is pay attention to Delta's stance on tariffs with Airbus. It's a really significant signal.
A warning shot, almost.
Yeah, it highlights the very real risk of higher costs for Boeing if retaliatory tariffs hit them, and the risk of weaker demand for planes if the global economy stumbles over trade friction.
And the takeaway for the stock.
It seems like Boeing's trajectory, maybe more than usual, is really tied up in how these global trade negotiations play out. Future depends heavily on that.
Right. And hopefully, by dissecting this Delta situation, we've given you, our listener, a bit of a shortcut to understanding what's a pretty tangled issue.
With big potential consequences for aerospace and maybe your investments.
We tried to connect the dots, show how one airline's report echoes much wider concerns.
Exactly. Making sense of those connections.
So, maybe a final thought to leave everyone with. Thinking about this web we've just untangled, it makes you wonder, doesn't it? What other, maybe seemingly unrelated global news or events are happening right now that might have unexpected ripple effects on the industries you follow closely?
That's a great point. Always worth looking beyond the obvious headlines.
Definitely something to ponder. Keep an eye on those ripples.